Now I am joined by President Trump's Treasury Secretary, Scott Bessent. Thanks for joining us this morning, Mr. Secretary. We appreciate it. Let's start with the polls. For the very first time, the president's polling numbers on the economy are underwater, with 53% saying it has gotten worse under President Trump, with 72% of those in our poll saying it is very or somewhat likely that his economic policies will cause a recession. Your reaction?
Oh, well, Martha, I haven't seen the polls, and for the past 35 years, my business was analyzing data, so I think we've probably got to dig down in those. But what I do know is that Americans are behaving very different than what the surveys say. So the surveys may say that, but consumers are still spending. So I prefer to look at what Americans are doing rather than how they're answering pollsters.
And it doesn't worry you, the poll numbers that...
Is the U.S. economy really heading for a recession, or is it all just a media frenzy? What if I told you that despite alarming polls, Americans are still spending like nothing's wrong? Today, we're breaking down the latest economic turmoil, the Trump administration's bold trade tactics, and the truth behind the biggest tariff war in decades. Stay tuned, because what you're about to hear might just surprise you. Hello, everyone, and welcome back to the channel. Today, we have a special guest, former Treasury Secretary under President Trump, Scott Bessent, here to break down the latest developments in the economy and the administration's ongoing trade negotiations. We're diving into some of the hottest topics: poll numbers, tariffs, and the future of manufacturing in the U.S. Let's jump right in. Mr. Bessent, thank you for joining us today. Let's start by talking about the polls. For the first time, we're seeing President Trump's approval ratings on the economy dip below water. 53% of Americans say things have gotten worse under his leadership, and a whopping 72% of respondents believe his economic policies might trigger a recession. What's your take on these numbers? Well, I haven't seen the exact polls, but I spent 35 years analyzing data, and I think it's important to take a closer look at the full picture. Polls can be misleading, especially when consumer behavior doesn't reflect what surveys say. Despite what those numbers suggest, consumer spending is still strong, which shows that the reality on the ground is different from what these polls claim. People are still out there making purchases and engaging in the economy, so I'm inclined to trust what Americans are doing rather than how they're answering pollsters. That's an interesting point. So, you're not worried by the polling data?
These poll numbers, and also, when I look at some of the things that are being published, there was a story 10 days ago that said this is the worst April for the stock market since the Great Depression. 10 days later, the NASDAQ is now up on the month of April, and I haven't seen a story that says, "Oh, stock market has biggest bounce back ever." So
it certainly has gone back and forth.
I think a lot of this is media driven.
Let's talk about the Time interview with President Trump. He said that he has made 200 deals on tariffs. 200 deals? Who has he made deals with? Is there actually any deal at this point?
I believe that he is referring to sub-deals within the negotiations we're doing. And, Martha.
Do you think it's just a temporary setback? Look, these things fluctuate. Just a few days ago, we saw reports claiming that April had been the worst for the stock market since the Great Depression. But within a week, the NASDAQ had recovered and was up for the month. I've yet to see headlines that celebrate that rebound. Economic indicators are complex, and we can't judge the long-term trajectory based on short-term movements. Right, so it's not all doom and gloom. Moving on, President Trump recently mentioned making over 200 deals on tariffs. But what's the reality here? Are there actual deals, or is this more about ongoing negotiations? Well, when the president talks about 200 deals, he's likely referring to various sub-deals within the broader negotiations. We're not talking about 200 separate, finalized agreements. In reality, there are 18 key trading partners that matter the most to us, and those talks are ongoing. China, of course, is in a category of its own, but with other countries, we're seeing progress, especially in Asia. This approach involves using tariffs as a leverage point to bring countries to the negotiating table. That brings us to the president's strategy. He's known for using tariffs as leverage, sometimes announcing them, then stepping back, making exceptions. You mentioned a tactic called strategic uncertainty. Can you explain that for our viewers? Sure, in game theory, it's called strategic uncertainty. You don't reveal your full hand to the other party. By announcing high tariffs, you create pressure. Then you leave room for negotiation, offering incentives like lowering tariffs or removing trade barriers in exchange for concessions. It's a tactic that has worked for President Trump, as we've seen some countries, particularly in Asia, already start to make changes they wouldn't have considered otherwise. That all sounds like it could work in theory, but we're hearing from some small business owners that they're already feeling the pinch.
Than President Trump. He's shown the high tariffs, and here's the stick. This is where the tariffs can go, and the carrot is come to us, take off your tariffs, take off your non-tariff trade barriers, stop manipulating your currency, stop subsidizing labor and capital, and then we can talk. But I tell you, Martha, that we've had several of these Asian countries that come in and said, oh, well, we'll stop doing this, this, and this. And I look at these lists and I think, how did we get here? How did we get here? Because this trading system has been so unfair. And as President Trump says, I don't blame the countries. I blame the previous administrations that let them get away with it.
But Mr. Secretary, look at what you just heard from Barton O'Brien there. The administration says it's worried about Main Street, not Wall Street, but you heard.
Some of them, like the business owner we heard from earlier, are worried that the inventory they have in China could be worthless if tariffs keep escalating. What do you say to that concern? I understand the concern, but here's the thing. China's economy is heavily reliant on selling goods to the US. If businesses here stop ordering from China, it'll have a serious impact on China's economy as well. China won't be able to sustain this approach for long. We're already seeing them respond to our pressure. Tariffs aren't just about punishing them. They're about forcing them to play fair. So, if we're talking about long-term strategy, President Trump is focused on bringing back manufacturing jobs. How realistic is that? How soon can we expect to see those high-performance jobs come back to the US? It's a process. Right now, the US has a very strong financial and tech sector, but we've lost a lot of our manufacturing base. What President Trump is doing is shifting the economy toward high-performance manufacturing jobs, not low-wage labor. It's a transition, and yes, there will be pain. But the future we're building is one of higher-skilled jobs and fairer trade. Deals. That's the goal. But how long will it take to get there? How quickly can we see the manufacturing sector come back? It's not about creating new jobs in the traditional sense. We have low unemployment already. What we're focusing on is creating well-paying jobs with fair trade practices. The transition will take time, but we're already seeing interest from companies willing to bring high-tech manufacturing back to the US. Turning to China, there's been some back and forth about whether there's active negotiation going on. President Trump claims to be in talks with President Xi, but China denies this. Who's telling the truth here? I can't speak to every conversation, but I can tell you that there is a process in place. We've been engaging with Chinese officials, and there are trade negotiations happening. The Chinese might be playing to a different audience by denying it, but the reality is, their business model is unsustainable without the US market, and they know it. And what about the impact on the markets? Stocks, bonds, and the dollar have all seen significant hits recently. Are investors starting to lose confidence in the US economy? Markets can be volatile, but this kind of noise in the short term doesn't concern me. Over the long term, we're setting the stage for a strong US economy, a stable dollar, and a market that investors can trust. It's all about positioning ourselves for future strength.